Welcome back, everyone. If you felt that the U.S. housing market was out of reach in 2023, you're not alone. In fact, a recent analysis by Redfin reveals that a staggering 84.5% of homes for sale were not affordable for the typical U.S. household, marking the lowest affordability share in a decade. And despite unexpectedly strong job growth last month, economists remain cautious, emphasizing that payroll gains were somewhat offset by downward revisions in previous months. Real estate investor Grant Cardone, he warns the U.S. is entering the greatest correction of his lifetime. Wells Fargo even predicts that the Fed's rate cuts could trigger a mild recession. Translation: layoffs and possible bankruptcy for working class Americans. Now, Grant Cardone stressed it's unaffordable for people to own a home today, blaming the Federal Reserve for single-handedly killing the housing market with interest rate hikes. Zillow also predicts New Orleans will have one of the nation's coolest real estate markets in the coming year. And by coolest, this is not to be considered a good thing here. In fact, Zillow expects Buffalo, New York to be the nation's hottest housing market in 2024, with several cities in the Midwest, including 3 in Ohio, following closely behind. Now, I'm not saying that there's going to be some big, huge housing market crash, because I've talked at length about how the market would need way more sellers for that to be able to happen. There have been way too many YouTube financial gurus who have been accurately predicting all 36 housing market crashes that have happened in the last 6 months. I know it takes a lot of work to make these sad face, lightning strike, house on fire, Fed chair, laser eyes, chart pointing down with no context thumbnails. I mean, keep up the good and honest work, seriously. Or maybe I'm not serious. But if, and this is a mighty big if a housing market crash were to happen, these would be the factors that I would be looking at. Grant Cardone says it's going to be at epic levels. Add to the fact that 85% of Americans say it's a bad time to buy a house, and you'd probably wonder about this significant shift in the real estate housing market dynamics. So yeah, definitely stick around, guys. This is going to be a very interesting one to say the least. But let's go and get right into it. So here's a housing expert talking about the affordability crisis in today's housing market. Check it out.
Got it. Nearly a quarter of first-time home buyers lived with their parents before buying their own home in 2023. A quarter. What does that tell you about the real estate market or the housing market?
Well, it tells you that it's unattainable for most. Interesting about that report is it actually dropped, I think, from 27% down to like 23%. So it's still roughly a quarter. But if you look at historical trends in housing, it's not uncommon at all for young couples to rent before they buy, or even try to save money by living with their folks or living with family. So that's not overly alarming. What's unique about it is we went through this whole period where millennials were sort of living on their parents' couches for a variety of reasons, and affordability really wasn't one of them. Now we have this major affordability challenge for first-time home buyers. And that's the thing that worries me, because I think the ownership of a home for a family is probably the greatest wealth accumulator for them in their lifetime.
Now, according to the latest survey from real estate group Redfin, most homes for sale in 2023 were not affordable for typical U.S. households. The way they measure it is that a home is deemed affordable if the estimated mortgage payment is no more than 30% of the average local monthly income. Can you guess what percentage of homes actually made the cut? 15.5%. Not even a fifth. Just 15.5% of homes for sale were affordable for a typical U.S. household, the lowest share since Redfin started tracking this data a decade ago. Hence, affordability plunged 40% from before the pandemic and 21% from just last year. That's why most people say that the worst part of this housing market is having to pay top dollar for properties that aren't even worth the prices. Houses that aren't worth $100,000 selling for $450,000 and so on. It's definitely becoming unbearable for most folks. It definitely makes you think how location is truly key to any real estate investment. If this whole thing turns around and the market ends up falling after all, location might be able to save people from bigger losses. Great locations recover faster from downturns than bad ones. Just some food for thought for you guys. Going back to the affordability problem, well, affordability crisis now, definitely. So Redfin says spiking mortgage rates were a key reason why. You see, normally higher rates should push home prices down, but Redfin also finds the number of affordable home listings dropped sharply in 2023. It's the mortgage rate lock-in effect in action. Many people don't want to sell now and give up their much lower mortgage rate, and that tight market has also helped keep prices high. It just makes sense, guys, because even the people who got in at that sub 5% mortgage rate, they're having a hard time right now. So how do we fix this housing affordability issue? Well, if we let Grant Cardone tell it, interest rates will have to come down in order for pricing to come down. This is actually a contradiction to what most people think, because when interest rates come down, mortgage applications will go up and people will start selling their homes. So what do you guys think about Grant Cardone's proposed solution? I know someone who bought an affordable condo back in 2016, but with rising insurance, HOA fees, property taxes, even that is quickly becoming unaffordable. The interest rate is 3.25%, but the cost of everything else is rising very fast. No one talks about that part though, am I right? We know this. The US affordable housing shortage is years in the making. Since the housing crash in 2008, the US hasn't built enough new homes to keep up with demand. This has led to a shortage of millions of units, driving up both home prices and rents, and making the affordability gap especially challenging for lower income households. Zillow experts in the housing field point to the shortage and prices as major contributors to the alarming increase in the US homelessness rates. In their recent annual account, the Biden administration revealed that over 650,000 people had slept outside or in shelters on a single night in January 2023, making a 12% increase from the previous year. A very sad number to look at, especially when you realize that it coincided with the expiration of much of the pandemic aid that had prevented evictions. To address the issue, more cities and more states are relaxing their zoning laws to encourage construction with the hopes of eventually bringing down overall prices. It's at least a start, as 2023 saw a record number of apartments under construction. But still, economists warn that achieving a balance will likely take years. So is the Redfin team hopeful at all for this housing market? Well, they did end the report with some cause for optimism. So according to this, many of the factors that made 2023 the least affordable year for home buying on record are easing. Inflation and mortgage rates have come down a little bit, and home prices are growing slowly as more people list their homes for sale. So what do you guys think? Are you hopeful or pessimistic about the US housing market? Or what about the US economy in general? I would love to hear your thoughts, guys. Don't go away. More to come on this one, including our own take on the recent December jobs report, what economists are saying exactly about the looming recession this 2024, and last but not least, who's still buying houses in this housing market? All of that later in this video, so definitely stick around. But first, I just want to give a quick thanks for watching. If you're appreciating the financial information and real estate breakdown, don't hesitate to show your support. Light up the like button so more people can find our content through those YouTube algorithms. Subscribe to the channel and tap that notification bell too while you're at it. That way you won't miss out on any of our future updates. And speaking of, let's get right on with this one. So the December jobs report, a pretty big one, but not for the reasons that mainstream media is looking at it. They say job growth was unexpectedly strong last month, but if you really look at it closely, the strong showing was offset by downward revisions totaling 70,000 job gains in October and November. The bottom line, economists said it was mostly a wash. In fact, overall job growth slowed in 2023. Employers added 2.7 million jobs, or 225,000 jobs a month last year. That was actually down from 4.8 million or 399,000 jobs per month in 2022 as a post-COVID surge in the economy faded. Plus, fewer industries are driving job gains. You'll notice how it's the recession-proof sectors such as government, healthcare, and social assistance that are actually pulling the weight when it comes to job gains in the US. Others such as trucking and professional services, they've been lagging. Labor force participation fell too. The share of adults working or looking fell to 62.5% from 62.8%, the biggest decline in nearly 3 years. Now, this is worrying because a smaller supply of workers could push up wages. Yeah, that sounds like good news, but it could also mean that the Fed's job of wrestling down inflation could be made a little bit more challenging. Kind of a double-edged sword on that one. So the Fed could theoretically keep raising rates higher for longer. The rise in wage growth and the fall in participation could help prod the central bank to keep rates higher for longer to make sure that it has stamped out high inflation. At the very least, this jobs report lowers the odds of a March rate cut. Furthermore, the job market is expected to cool further this year. Unemployment gains are expected to pull back more dramatically in 2024 as the economy loses steam, but partly due to the delayed effects of the Fed's 5.25 percentage points in rate hikes. We could be talking about layoffs here. Atlanta-based Blue Fletch, which makes security and sign-in software for workers' handheld devices, it has seen its largest retail customers cutting costs because of high interest rates. The firms are scaling back purchases of mobile devices, and that means that they need less software. Pretty soon, things are going to get tight. And you know the favorite part that companies go to when it comes to cost cutting, right? Yeah, that's right, people. Brace yourselves, guys. Economists at Wells Fargo predict that while the worst inflation is behind us, a recession still looms for the second half of 2024. They talked about inflation going from 9% to 4% and how that's always going to be easy. But with the lag in the effect of the Fed rate hikes combined with the coming Fed rate cuts, that we are foreseeing, at the very least, a mild recession. Now, something that they say is a normal part of the economy and necessary for the central bank to reach its target inflation rate of 2% in the long run. Sure, tell that to the people who are going to lose their jobs because of this mild recession that they're calling it. As for housing, 85% of Americans say it's a bad time to buy a house. I mean, anyone shopping for a home right now has to contend with a combination of high prices and high interest rates. To make matters worse, there are not a lot of homes on the market to choose from. So who's still buying in the current market? The National Association of Realtors has this yearly survey that offers a little bit of insight on that. The snapshot says first-time home buyers accounted for about a third of all homes sold during the 12 months ending in June. And from what I read, many successful buyers are the people making trade-offs, like moving farther from the center of town and giving up that bonus room that she was hoping for. So my guess is these are people who can't wait any longer and just kind of had to get a roof over their heads. But what do you guys think? Let me know if you have your own insights to share. We can definitely pick this up again in another video. Just say the word, drop a comment down below, and I'll see you guys on the next one. You guys take care now.